property companies pay lower tax bill. Property investment companies and retirement village providers are paying the lowest tax bills of the biggest companies on New Zealand's stock exchange. University of Auckland accounting professors Jill Nod Wong and Norman Wong looked at the NZX 50 and analysed the company's effective tax rate, the average tax rate applied to the company's profits, and cash tax rate, the percentage of net profit the company actually paid in tax in 2017. It showed that while most of the firms were paying something close to the official 28% company tax rate, there were some big exceptions. Goodman Property had an effective tax rate of just 3%. Metliff Cares was 3%. 8%, but its cash rate was 0%. Precinct Properties had an effective rate of 2.6% and a cash rate of 1.5%. Ryman Healthcare and Somerset Group each paid no tax. Jill Nod Wong said businesses with a heavy exposure to property revalued their assets every year. That revaluation typically is an increase. The increase they regard as part of their net profit. Because it's a capital gain, it's not taxable. Their income tax expense is based on what's taxable. It gives them a low effective tax rate. He said it was not an unfair advantage because all companies with capital gains would be treated that way. But those that had a lot of money tied up in property reaped the greatest benefit. They are in a business model that's favorable. Sky City had a tax rate on both measures of more than 50%. Wong said that was because a goodwill impairment of $26.814 million was deducted in 2017. While that reduced the performance for the year, it did not reduce the tax bill. Somerset Chief Executive Julian Cook said his firm was not paying income tax because of the investment it was making in building healthcare infrastructure. We currently invest in excess of $250 million each year, and this is set to grow over the coming years. These investments have an associated tax depreciation deduction. If we are not investing these sums, we would be paying tax today. Similarly, if we stopped building new villages in the future, we would pay tax very quickly. In addition, the majority of Somerset's accounting profits have comprised of unrealized revaluation gains on investment property. These are not realized in cash and are not taxable. He said Somerset paid a lot of non-claimable GST on construction and operating costs for residents. Regardless of whether we pay corporate tax or not, our shareholders certainly do. We pay dividends to our shareholders. These are unimputed, which means that these dividends are subject to resident withholding tax at 33%.